Hello everyone, and welcome to this video about the ledgers, more specifically the general ledger, purchase ledger, and the sales ledger. This relates to specification section 1.2, 1.3, 1.4, 2.3, 3.3, 5.1 and 5.3. Quite simply, the general ledger is the collection of ledger accounts. These ledger accounts include the sales ledger control account, also known as your receivables, the purchase ledger control account, also known as your payables, the bank account, and the VAT account. You can see here a typical outline of a ledger account. The date column contains the date of the transaction, the details column contains the title of the other ledger account that holds the second part of the dual effect. The folio column contains the source to the information such as the invoice number or credit number. This column is optional. The amount column contains the monetary value of the transaction, and the title of the account is the name that reflects the nature of the transactions. Let's discuss some handy rules for entering into ledger accounts. Every debit entry must have an equal and opposite credit entry. You should also try to remember the mnemonic DED clip, which means that debits will increase when the expenses, assets and drawings increase, and credits increase when liabilities, income and capital increase. If these were to decrease, then the columns would swap. Now let's discuss the purchase ledger, also known as the subsidiary purchase ledger. It is a set of accounts for individual payables and the transactions involving that payable. It's worth remembering that the purchase ledger doesn't follow the double entry system. It is essentially just a more detailed version of the purchase ledger control account lit for each individual payable. Now let's discuss the sales ledger, also known as the subsidiary sales ledger. It is a set of accounts for individual receivables. Again, it doesn't follow the double entry system. It is a more detailed version of the sales ledger control account where it's been split for each individual receivable. And, as ever, thank you for watching.